The situation in China that is happening right now is deteriorating rapidly. First, we had the crisis with Evergrande, which exposed the huge amounts of bad debts in China, especially in the real estate market and with property developers. But this is now causing contagion and it's rapidly spreading through the whole of China's economy. But we just got some new huge news and some new data that shows that things are getting even worse than we thought. So in this video, I'm going to break down all this new news and all this new data to tell you what it means for you and me and what it means for the markets. Okay, everybody, let's not waste any time. Let's get straight into the news, the facts, and the data. So have a look at this, everyone. Evergrande is living dead despite making its recent coupon payment. So what this article is going into and what this means is Evergrande had an original coupon payment of around $84 million, which was due on the 23rd of September. I was telling you about this and I was saying if they miss it on the 23rd of October, well then they'll officially default. And they did luckily make a last minute payment. And so the market thought, okay, they made their payment, everything's fine now. Well, no. It is far from fine. This is only an $80 million payment when they have over $300 billion in liabilities. That's like someone that's got a $3,000 credit card debt and they call up their bank and say, look, I can give you 80 bucks. Clearly, it's not good enough and a default is imminent and it's only a matter of time and they may be able to make a few payments here or there, but they're definitely not going to be able to avoid a default on their $300 billion worth of liabilities. Well, if things couldn't get bad enough, now China is entering into another hard lockdown when we already have so much issues going on right now with the supply chain crisis, with China's economy weakening, which again, China's the second biggest economy in the world with $14 trillion of GDP. So with their strategy trying to completely eliminate the virus, this is going to have bigger consequences on their economy and we're going to pay for this with delays in supplies because they are the ones that create all the goods for us to consume in the West. But people, something that is huge happening right now, and we're starting to see the ripple effects from the Chinese real estate market going down. And again, this is going to have consequences for all of us. Look what's happening now with the land market. So China's land market slump threatens the $1 trillion revenue earner. China's cash-strapped developers are becoming reluctant to bid for land during the nation's property slump, threatening to undermine a $1 trillion revenue source for local governments and deepen the economic slowdown. Because this is what's happening right now. About 27% of land parcels offered by local governments went unsold in September, as no developers submitted bids at all. This is the highest rate since at least 2018, according to data compiled by Chinese Real Estate Investment Corp, which tracks auctions across 128 Chinese cities. Proceeds from land auctions across the country plunged 18% in August from a year earlier. This is the biggest decline in almost 3 years. And I bring up a chart here. This is the percentage of land plots that went unsold during the government auctions. And we can look at the trend here, people. The trend is our friend. And we can see it's looking like it's going to accelerate. But what exactly is causing this? So developers faced with weakening funding access and rising borrow costs amid deepening crisis at China's Evergrande group, many developers have been refraining from replenishing their land holdings. In one sign of how tight financing has become, the industry's borrowing from banks dropped 8.4% from last month. That's right, just in 1 month, the most since 2016. So developers are hoarding cash to avoid becoming the next Evergrande. The contagion is real, people. It's not just speculation anymore. It's not just predictions. We're literally in the middle of the chaos right now. As a result, land auction failures are on the rise across China. Beijing, the eastern metropolis of Hangzhou, home to the headquarters of Alibaba Group Ltd, didn't find any buyers for almost 70% of land parcels put for sale this month. During the latest round of auctions held by local governments, 3/4 of transacted parcels were sold at government-dictated base prices versus a premium of 45% before. Jeffrey analysts said in recent note, adding that the cooldown in the land market is faster than expected. So all these people saying, look, there's nothing to worry about, it's going to be fine, there's no contagion risk. Well, people, they completely wrong. There is contagion and things are deteriorating. But I've got even more data, which I'll get into in a moment, that shows it's even worse than this. So that doesn't bode well for the world's second largest economy, which slowed in the third quarter as the property and construction sector shrank. It's also set to worsen the debt problem at local governments, which according to eHouse China Research and Development Institute, rely on land sales for about 40% of their revenue. Municipalities are already facing revenue pressure from the flagging economy and struggling under a mountain of debts following years of investment binges. Okay, so we know things are bad with Evergrande. We know that the pandemic in China is getting worse. We know that the land market and the housing sector is shrinking. But what is this new data that we all really need to pay attention to and worry about? This, everyone. Unexpected collapse of Chinese property developers pushes China's 2021 default total to a record high. And people, we just got another developer in China which just defaulted, Modern Land. And I bring up a chart here, we can see their bonds plunged from 80 cents on the dollar to 30 cents on the dollar. So what happened here with Modern Land is about 2 weeks ago, they had their $250 million bond payment, which was due on October 25th. They asked for a 3-month extension and they didn't get that 3-month extension and have now defaulted on this bond. This latest failure means that Chinese borrowers have now defaulted on a record $9 billion on offshore bonds just this year so far, with the real estate industry accounting for 1/3 of that amount. That comes as authorities clamp down on excessive leverage in the real estate sector amid a crisis at China's Evergrande group that has left many investors around the world on the edge. So again, we can see here, I was talking about this earlier, the first half of 2021, it hit a record, but now already in the first 3 quarters of 2021, we've already overtaken 2020, and it looks like the trend's going to continue, and also I expect there's going to be a lot more defaults in 2022. And this is why more defaults are coming. Rating agency downgrades of Chinese developers have accelerated further in October, hitting a record high for the second straight month. As I bring up a chart here, shows there were 44 cuts in the sector by Moody's Investors Service, S&P Global Ratings, and Fitch Ratings as of October 21, after 34 downgrades for all of September. But now what's happening in the bond market with China is yields are spiking to 20%. So that's going to make funding for these developers even harder. Also, if the dollar strengthens, that's going to make it harder again. So we're going to see a wave of more developers going under. So speaking to Reuters, an investor with exposure to Chinese high yield debt said that developers are defaulting one by one, adding that the question is always, who's next? That's right, everyone. Who is next? What kind of crisis is this going to lead to around the rest of the world? We're already seeing the effects on the Chinese economy, but I'm just waiting to see until some other major company goes down and find out that some other bank has exposure to this or has too much debt lent out to one of these developers, and then that affects some bank around the world and causes some kind of financial crisis. It will come out of nowhere, and if you don't prepare now, you'll never be prepared, because it will happen so fast, just like what happened in 2008 and in 2020. So if you thought they were going to come to the rescue and bail out the housing market and, keep kicking the can down the road and keep making the bubble bigger like what they do in Australia and in the US, well, they're actually doing the opposite to that. So China widens its property tax trials with levy on home owners. So they're continuing to go ahead with their common prosperity goals to take the crazy speculation out of the housing market. And hey, I think it's a good thing, and maybe something they should try to do in the West. Try to think of some reforms, because 20% price appreciation year on year just isn't sustainable, and it creates huge financial risks from when the housing market does eventually crash, especially if the housing market grows so big and everyone puts all of their money in it. If the whole nation's wealth is in housing and then that goes under, well, then the nation has no wealth left over at all. And of course, this is leading many experts to say that Chinese economy risks a deeper slowdown than markets realize. Because what have we been talking about, everyone? I've been telling you how the Chinese real estate market is worth over $60 trillion, and the housing market makes up to 29% of GDP. So imagine if the housing market falls just 20% in China. That's going to be $12 trillion of wealth wiped out, nearly all of China's annual GDP. And again, I cannot stress how important China is in the global economy. If they slow down, like I said, if China, sneezes, we'll catch a cold throughout the rest of the world. And I've also been talking about the supply chain crisis and inflation, which could lead to a huge policy mistake at the Federal Reserve, because we all know inflation isn't transitory. But just a quick side note here, here's more proof that inflation is just going to get worse. So double-digit price hikes on China's exports adds to the inflation risk. Higher input costs and strong demand prompt price increases. But everyone, what does this mean for the markets, and what does this mean for you and me? Well, what this means, everyone, more developers are going to go down. We're going to see more defaults. China's economy is going to contract massively. This is going to lead them to have to sell other assets around the world to cover their losses. So we could see some Chinese developers selling some of the assets around the rest of the world, like in Australia and the US, etc. And if enough offshore investors get burnt, or if some other offshore banks have exposures to these developers, and the day that Evergrande does eventually go down, which is not a matter of if, it's just a matter of when, this could lead to, like I've been talking about, another Lehman-like financial crisis, which will have ripple effects throughout the global markets, and it could cause a sell-off in the US stock market, even though there's so much crazy speculation going on right now. And people, what I'm seeing in the markets is ringing alarm bells in my head. And people, if you do not study history, you are bound to repeat it. And something people also say, what we've learned from history is people don't learn from history. If you read and research exactly what led up to the 1929 Great Depression, what led up to the 1999 dot-com bubble, the crazy euphoria in the markets of the retail investors, well, I'm starting to see that today. First, we had the crazy meme stocks like GameStop, like AMC. Then we had Dogecoin, which I like to call it, which went on a crazy run. But now we've got another cryptocurrency, Shiba Inu, which is going up thousands of percents in just a matter of months. It's this crazy speculation and euphoria that normally tells us we're at the peak of the bubble. And what happens with psychology with retail investors, especially inexperienced retail investors, is they get hooked on this hopium that they can put their $1,000, $10,000 in the market and turn it into $1 million, and they'll completely ignore all the fundamentals, all the facts, all the warning signs. If anyone like myself comes out there to try to warn people, they'll tell them to shut up. They'll tell them, hey, you're just spreading FUD, fear, uncertainty, and doubt. You're just all doom and gloom. The crash is never going to come. Well, people, when you're hearing this time and time again, when you're seeing even the bears turn bullish, again, that is another indicator that we're at peak euphoric times in the market. But just like all other crashes in history, they come swift, out of nowhere. All it could take is some news like Evergrande going down, or something breaking in the financial system in China to send markets tumbling 15 to 20% in a day, and it'll be too late for people to prepare. That's why I'm sending the alarm bells now. So everyone, when there's FOMO and euphoria in the markets, you need to just calm down, take a step back, look at the situation we're in with evaluations, with the debt, and think really critically if now is the right time to invest. So everyone, that was just my thoughts and opinion, what's going on with China right now, what's going on with the markets. What do you think? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.